Today is Thursday, December the 19th, and a couple of things contributed to the run-up in the afternoon. One, the NAFTA Phase 2 or NAFTA Part 2 was sent to the Senate by the Democratic House, showing that things can get done, not just impeachment. And the Senate passed the first of two spending bills. I believe they were the ones that they got from the House as well. So that would explain this little bump in the afternoon. So the Dow ended up 137 on good volume, NASDAQ above average volume, S&P good volume. Advancers led decliners 56 to 37, which is going to take our oscillator up to the 200 line. I don't think it's enough to take it to this point right here. But there is reason now to be a little bit concerned, because when we reach this level, it's unusual to continue higher, as you can see in previous points. One time we did, and that would be the big run up into the new year after the big drop in November and December, which we have not experienced. We haven't had a big drop going to this far oversold. So the S&P finished up 14 points and now clearly has broken away from this trend line, which would certainly indicate more upside to come. And we now have a new current high. So let's move the line. We now have a current closing high, 3205. Apple 280. So 280 is proving to be tough to break. We haven't had a new closing high, and we didn't even make a new daily high. But there's no reason to think that we aren't on our way to 288.80, particularly since Apple is probably having a pretty good Christmas season with all of the Power Beats wireless, the iPods or AirPods Pro, and the iPhone, and new iPads, which are lower priced. So things are just generally going in Apple's favor. Volume was a little bit low. Caterpillar down $2.10, coming down to touch the top of this bull flag. That could be just a test, but we did fall below the 8 EMA. And again, volume was a little bit low, so it wasn't the institutions that were involved in the selling. So our alarm was tripped because we did come back at one point in the day to break into this flag pattern here. But what do we see in our stochastic momentum indicators? We see the short-term indicators starting to go down after making a higher high after a lower high. In fact, we've had a series of lower highs, 1, 2, 3, same, 4, and then we made a higher one, but now we're headed down. Let's keep an eye on that stochastic momentum index. Home Depot up $2.10. I did add the vertical spread in March of the 225 to 235. They cost me $3.25. So the upside, if it finishes above 235, is that I'll make the difference between $10 and 325, or $6.75. So it's about a 2-to-1 opportunity there. And I'm bullish on Home Depot at this point. Volume wasn't particularly strong, however. AT&T up 20 cents. AT&T continues to be strong, $38.94. The cloud was support. What do we see in our stochastics? Let's take a look at the stochastics. And we have the long-term stochastic, the slower one, moving higher. The short-term one, the faster moving one, still has a bit more room to go, but it could be tapping out, and we could see some pulling back. We're also above the 68.1, but AT&T is a good one. Remember, the dividend is coming out, and the dividend is 52 cents. Up till January the 9th, you can buy into that. I still have some short 38 calls, which of course are in the red right now, but I'm going to roll them substantially forward because I would like to make sure I keep the dividend. WDC up at $1.77, and look at this, we have broken through and into the gap, and that's important. And our stochastic momentum indicator continues to move up. We didn't have the pullback. The slower moving SMI is also moving up, so this is significant for WDC. This means you can buy some call spreads. Do we have anything here in terms of a trend line? Well, we could, if we make a third hit right here on this line. So let's just draw that gap is not correct. There's the gap there, properly drawn. So we're clearly nicely into the gap. Very small difference between open and close, but a lot of range in the day. We had a range of $1.44, but we only closed 14 cents higher. Sorry, $1.44 higher, but we had a range of $1.86. So it moved from high to low $1.86, but finished up $1.44. So that's quite healthy there. Whirlpool, not healthy, and the stochastic momentum index is down, and so that does indicate that the time to step into Whirlpool is not until we have a reversal in this SMI, because the longer term the slower moving SMI is still moving upwards, and so it's positive for the stock, but this is just a healthy little pullback. And you see these pullbacks. Look at here, when we had the slower moving one dropping all the way down, we had the faster one moving down and up and down and up and down before finally the shorter moving longer term SMI started to move up, and that's what we're waiting for here. We're waiting to see this SMI turn up, and then that is going to be an opportunity to step in. Amazon up $6.97, came down today to touch the cloud and the 8 EMA. The Chiku span is broken through all of this resistance, so it's still heading towards the 200 or the edge of the cloud, so Amazon is looking positive. Shopify pulled back, and we shouldn't be surprised there, because remember that yesterday we hit the 178.6% on the extended Fibonacci. You're going to have to look at yesterday's and previous days' videos where I explained these. So on Tuesday, I guess it was, for Andy, I made a longer term video to explain where these Fibonacci's come from, but that's proving to be resistance. We should be going to 409.61, but not yet. Now look at the SMIs. They're both tapping out. This might be all she wrote for Shopify. So this is not a time to step in. Low volume today. We've had the institutional buying. We haven't had any institutional selling except for one day here. But I would be paying big time attention to these SMIs over the coming days. They both appear to be exhausted. That's it for today. We could be going higher, but I'd take a look at the McClellan oscillator. Christmas coming up. Tomorrow is the last day for options traders. So all bets are off tomorrow. There'll be options buying and selling, which means that the market makers are going to have to buy and sell stock to balance their books. So tomorrow will be a bit of an aberration kind of day. not one that I would like to call.